You know, when you were on with us about a month ago, you were outlining several reasons, you know, several different factors, right, on what would push sort of the decision over the edge into a yes. Was there a defining a point here that finally, you know, convinced the committee to say, OK, let's do this year, let's do it now?
Yeah, at the time I saw you, we were in the middle of the consultation process. We end up talking to about, you know, over 100 institutional investors from all regions of the world. And there was a strong support with the proposal that we put in place. Actually, we were able to get even a stronger support to revise it to a larger number of large caps. So that was one thing that was important. The second thing was a lot of these investors were concerned and sensitized about also the data issues to create all sorts of investment vehicles. And therefore, that's what happened in the last few weeks was working together with the CSRC and the Shanghai Exchange and the Shenzhen Exchange. We were able to solve a lot of those issues.
Right, and so I remember a month ago you said that those were some of the big issues. I'm kind of curious, Henry, this sort of like two-step process, I guess you might call it. You know, next year they're going to be included, but in two separate parts. Why is that? What's the thinking behind that?
That has a great deal to do with the trading limits, the ceilings of the amount of assets that can flow through the Connect program. So when you do all the computations on the number of shares and the market cap and all of that, and you look at what could investors put into the market through the Shanghai and Shenzhen Connect program with Hong Kong, the ceiling was restrictive. So therefore, what we're able to do is spend time with the regulators as well, and they will work together with us to see if we can get it done in one step. But obviously our announcement is on two steps just to make sure that we leave enough flexibility.
And Henry, it's Yvonne in Hong Kong as well. I want to say hello to you, but you also mentioned that this two-step process could change. And one issue that you raised, as you just mentioned, was this daily limit on the Stock Connect to be abolished or significantly expanded. Do you get any indication from Chinese officials or Charles Lee from the Hong Kong exchanges that they're willing to do that before these inclusion dates?
We get quite a lot of good feedback and positive views from them that they will work very closely together with MSCI at that time to see how they can facilitate the flow of assets into the country. And that's what gave us hope that we may be able to get it done in one step, but obviously, what we know today is that the daily limit exists, and we wanted to be cautious that unless there is a change to that, it will have to be done in two steps.
Henry, I want to bring up just briefly for a moment for our viewers a look at sort of the makeup now, the makeup of the MSCI index, and it just shows you in this bar chart here. I'm not sure if you can see that where you are in New York, but you know, the yellow line there shows you how much Asian country, you know, the countries in Asia are make up the index, and you can see just from 2010 it's creeped higher and higher to now 62% are made up by Asian countries. With the rest, of course, Europe, Africa, and others, and South America. And some are saying, you know, perhaps this is now becoming very Asia-focused. The index is very Asia-focused, maybe almost too concentrated now. What do you say to that?
Well, it reflects the realities of the weights, the market capitalization in the various countries and regions of the world. Obviously, Asia has been very prosperous, quite a lot of economic growth, a lot of great companies, particularly the technology companies that are coming out of China and listed in Hong Kong and New York and other places, the Taiwanese companies in technology as well. And on the flip side, you know, many of the other emerging markets, particularly in South America and some places like Russia, they're commodity exporters, and some of them are oil exporters. So there's been some decline in the equity values in those places, and therefore reduction in weight on their side and an increase in weight for a lot of the Asian countries.
And Henry, just before we head to break, I'm curious about sort of describe to me the decision and the meeting as to the extent that you can. I mean, was this one of the most intense meetings? Was there a lot of debate? I mean, describe to me, because this decision was not made lightly by any means, and the entire world was watching.
Yeah, we spent a great deal of time in internal deliberations at MSCI in our Index Policy Committee. We clearly spent a huge amount of time in consultations with our clients, and then we reflected a lot of those views to the CSRC and the Shanghai and Shenzhen exchanges, and they were very positive about working together with us and making the thing happen, particularly of very strong roles played by Vice Chairman Fang, of the CSRC, and President Wang of the Shanghai Exchange. They engaged very directly with us, and we're trying really hard to figure out a way that this could happen.
Henry, just talking about this China inclusion, essentially some were arguing that this was a watered-down proposal from the MSCI. There's weighting of just north of 0.73% now, which is higher than what the initial proposal was, but still a drop in the ocean, some are saying, when it comes to China in the context of EM. Did MSCI essentially give in to this? I know China did make some concessions, but not exactly letting go exactly either.
Yeah, a lot of what we were trying to do was create a path forward between the needs of those institutional investors around the world and the conditions in the marketplace inside China. And we tried, in the prior consultations to do a larger, significantly larger increase, and didn't get a lot of response positively from those investors. So we scaled it back a bit to 169 stocks. That was well received to the point in which we were able to increase it to a larger number of 222 large caps. We obviously left out the mid caps, which we're hoping that they will be included at some point in the future.
Yeah, 0.73% obviously is a small slice in the pie, Henry. How and when do you foresee that amount rising? What's going to be the optimal magic number for you, and what needs to be done to achieve that?
Yeah, so it's a smaller weight, obviously, than we would have liked at this early stage, but it's extremely historic, momentous, and symbolic, and it opens up the path forward. We're trying to create the environment in which those investors get to experience directly investing in China, get to meet with companies. The Chinese regulators and the exchanges get to see a lot of those investors in action inside the country, and get everyone to the table, so to speak. So I think our plan is to keep going in future years, but the path and the speed will depend a great deal on those two things. The experience of those investors and the willingness on their part to feel that a bigger weight is warranted given what they see there. And on the other hand, the further liberalization of the markets, particularly we're looking for reduction in the suspended shares, and we're looking for obviously the lifting of the trading limits in Connect and the further relaxation of the data issues.
Are those the major ones? I mean, Henry, I'm curious if, after this decision that's been made, do you expect even bigger reforms, and what kind would they be? I mean, what would you like to see beyond those three that you just mentioned? We
definitely get a view from inside China that there is a strong commitment to further opening up of the equity markets. They want to do it obviously in a steady and a stable way, which is logical, and it makes sense for such a big market and such a large country. So we have no hesitation in our belief that the country wants to open up. The question is at what speed they would like to do that, and that's what we're going to watch and therefore determine the path of further increases.
Right, and that speed, though, I mean, that could likely quicken given this decision, no?
I would think so, because, again, in bringing the two parties to the table, the investors on one hand and and the domestic markets, the players in the domestic market, that's going to help immensely in getting everyone experience, trying the system, getting to see the companies investing, hopefully making good returns and the like,
right.
and everyone will feel more comfortable and open up even further.
Before we move on to some of the other countries, of course, we're part of the statement here, or the press release by MSCI. Just one final thing on China, Henry. The mid caps, you mentioned them just a few minutes ago. Obviously small caps and mid caps not included here. When do you expect that could happen? What conditions would need to be there?
I think the next inclusion is probably going to have a larger inclusion factor. It was 5% of the market cap of those large capitalization stocks, and potentially as well the inclusion of the mid caps. The second category is something that we're very focused on. We would like to expand the universe of shares that are available to international investors.
Henry, let's move on and talk a bit about Saudi Arabia, which was also another pivotal moment for the Gulf nation as well. You take a look at them being in the watch list now for possible inclusion. What was the thinking behind that? What really made it happen here in the last 2 years, where the kingdom really has opened up its markets to foreign investors?
Quite a lot. In the last 3 or 4 years, we've been working very closely with the local exchange, the Tadawul, with the CMA, the Capital Markets Authority, and the senior people in the country, in which they have been following a very consistent programmatic path of reform. It started in the fall of last year with the regulatory reform in terms of the lifting or increase in the foreign investment limits and the like. In April, they did a major stock market reform with better delivery versus payment systems, better a process of T+2 rather than T+0. There is a settlement fail system that is much better, and stock lending and all of that. So they've been moving very fast and very aggressively, and that has allowed us to put the country on the watch list and start a consultation as soon as possible to see when a decision to include them can come.
Right, they've certainly been on hyper speed, you might say, Henry, on trying to get into the MSCI, and also, of course, the Saudi Aramco IPO. That also being, certainly significant there for the country. So what needs to happen then from now until 12 months later to make that decision be a yes? Is there anything specifically that you're looking for?
Well, just adding to what you said, I mean, a lot of these decisions come down all the way from the top. The Deputy Crown Prince of the country has been very focused on this, the Minister of Finance, the Minister of Energy, all the, obviously, stock market authorities and the like. So quite a unified front, and that's been very welcome by us. I think what we're now doing is trying to begin to gauge the reaction by international investors. Many of them have not yet invested in the country, so they need to set up accounts, set up a process, and get a sense of an experience in doing it. And that's a process that is likely to take a year or so before a decision can be made.